أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. Assalamualaikum warahmatullahi wabarakatuh. Okay, terlebih dulu kita doa dulu. Bismillahirrahmanirrahim. Allahumma salli ala Muhammad wa ala ali Muhammad kama sallaita ala Ibrahim wa ala ali Ibrahim fil alamin innaka Hamidum Majid. Wa barik ala Muhammad wa ala ali Muhammad kama barakta ala Ibrahim wa ala ali Ibrahim fil alamin innaka Hamidum Majid. Allahumma faqihna fid din wa 'allimna ta'wil. Allahumma inna nas'aluka ilman nafi'an wa rizqan thayyiban wa amalan mutaqabbalan. Rabbana zidna ilma, Rabbana zidna ilma, Rabbana zidna ilma warzuqna fahman. Allahumma ihtim lana bil husnil khatimah wa la tahtim alaina bis su'il khatimah. Rabbana zalamna anfusana wa illam taghfir lana wa tarhamna lanakunanna minal khasirin. Rabbana atina fid dunya hasanah wa fil akhirati hasanah wa qina adzaban nar. Wa sallallahu ala Muhammadin wa ala alihi wa sahbihi wa baraka wa sallam walhamdulillahi rabbil alamin. Okay, in our last class, our topic that we have discussed so far is up until topic 7 here, which is we have discussed business conversion. Okay, so now we're going to go into amalgamation. Okay, topic on amalgamation. Okay, as we have discussed earlier, amalgamation is one of the external reconstruction of a company. Okay, other than business conversion, we have amalgamation. So the situation with amalgamation is that amalgamation happens when two or more companies decided to combine their businesses or their assets and liabilities, and then a newly company will be formed to take over all the assets and liabilities of the old companies, where the old companies will be wound up. So these are the characteristics of amalgamation. For example, here we have an example. These two independent companies, Teguh Sdn Bhd and Bersatu Sdn Bhd, decided to combine their business to form a new company which is known as Teguh Bersatu Sdn Bhd. So two companies decided to combine to become one company. So what happened here is that this company, the new company, this company is a new company. Okay, new company which is newly formed in order to take assets and liabilities of both of this company, to take assets and liabilities of both of these companies. Okay, so what happened is that these companies will be wound up or liquidated, and a new company will be formed to take over the assets and liabilities of the old companies. Okay, so that is amalgamation, the process of amalgamation. So the old companies, which is the seller, and the new company, newly formed company, is the buyer. So now we're going to look at the book of the seller and the book of buyer in terms of accounting entries and so on. So to demonstrate the process of amalgamation, we're going to look into an example. Look at an example on amalgamation question. Okay, so this is an example of amalgamation. So in this example, we have two companies, Sri Berhad and Jaya Berhad. Sri Berhad and Jaya Berhad agreed to amalgamate on 1st July 2013, and a new company, Sri Jaya, will be formed. So Sri Jaya here is buyer, and the seller are Sri Berhad and Jaya Berhad are the seller. Okay, so Sri Jaya Berhad here will be formed with an authorized capital of 5 million. Okay, 5 million. consisting of ordinary shares of $1 each. So below are the financial position of Sri Berhad and Jaya Berhad. So if you look at in this example here, we have Sri Berhad financial position and Jaya Berhad financial position. It shows their assets and liabilities. So the question, example of this question, they will give you the financial position, and below will be, after that they will give you the additional information with regard to the amalgamation process. So let's take a look at the first additional information here. This first additional information here is with regard to assets taken over, okay, and also normally it discuss on the purchase consideration and the purchase price. So the first additional information here mentioned that Sri Jaya Berhad took over all assets except for bank and liabilities of Sri Berhad, okay, Sri Berhad, and all assets of Jaya Berhad. Okay, so it doesn't mention for it does not mention for Jaya Berhad whether the Sri Jaya take over the liabilities. So that means the liabilities is not taken over in Jaya Berhad. However, in Sri Berhad, Sri Jaya take over all asset except bank and also take over liabilities. Okay, so you just have to remember that information. So in the additional information further explain that the purchase consideration are to be settled by Sri Jaya, okay, as follows. So these are the purchase consideration, okay, purchase consideration paid to Sri Berhad and also paid to Jaya Berhad. Now, to ordinary shareholders, Sri Jaya will issue 800,000 ordinary shares of $1 each at premium of 20 cents, and to 7% debenture holders of Sri Berhad. So if you take a look at in Sri Berhad has 7% debenture holders. To the 7% debenture holders here, Sri Jaya will issue 55,000 ordinary shares of $1 each at par, and the balance will be paid using cash. And note that here the cash balance is not mentioned how much. So that means you have to find how much is this cash that they have to pay. You have to do this, you have to remember that the main equation that you have to remember is that the purchase price is equals to net assets taken over plus goodwill, okay, minus liquidation expense paid by buyer, paid by buyer. This is equals to purchase consideration. So it could be in the form of ordinary shares, preference shares, debenture, and cash. Okay, so here in this situation they give you ordinary shares, they give you debenture, because in Sri Berhad there is ordinary shares and debenture holders, the parties involved. Therefore, for purchase consideration, they already mentioned that they pay to the ordinary shareholders 800,000 at par, and to the 7% debenture holders 55,000 ordinary shares at par. So that means that leaves you balance in cash, which is not mentioned here. You have to find. Okay, so that means to find out the purchase price, you have to find what is available information here that you can adopt this equation to find the purchase price. So the one that they give you is the purchase consideration, where the purchase consideration given here is incomplete with regard to the balance in cash is not mentioned how much. That means you can only find the purchase price by looking at what is the net tangible asset plus goodwill and liquidation expense paid by buyer, if any. Okay, you have to calculate using these three items. Normally these three items will be given. If the purchase consideration is incomplete, normally these three items, okay, will be given in the additional information. Okay, that is for Sri Berhad. For Jaya Berhad, two ordinary shareholders in Jaya Berhad has ordinary shares and also preference shares as the parties involved in the company. So to the parties involved in Jaya Berhad company, the company Sri Jaya will pay to the ordinary shareholders 400,000 ordinary shares at a premium of 25 cents. And then to the preference shareholders, Srijaya will pay 250,000 ordinary shares at a premium of 20 cents, and the balance also in cash, which is also not mentioned in this example. Okay, so you cannot calculate purchase price using purchase consideration, so therefore you have to calculate using net assets taken over plus goodwill minus liquidation expense paid by buyer. Okay, that is additional information number one. So additional information number one deals with purchase consideration. Additional information number two here, for the purpose of amalgamation, the asset of Sri Berhad and Jaya Berhad were revalued. So this is the asset revalued amount. Okay, for purpose of amalgamation, the asset will be revalued, but some asset might not be revalued. Okay, so asset which is not revalued will be taken at book value, which is the value in the balance sheet. Okay, so upon valuation, some asset will be revalued upwards and some asset will be revalued downwards. So anyway, so this is the assets for Sri Jaya Berhad, which is revalued by Sri Jaya. Okay? Sri Berhad, we have freehold premises, motor vehicle, plant, furniture, inventory, account receivable, and also goodwill on amalgamation is also given. So here you have assets taken over, net assets taken over, plus goodwill given in this additional information. That means you can calculate purchase price here using net assets taken over plus goodwill, and the additional information that you have to find is liquidation expense paid by buyer, if there is any. So you have to look at into the additional information number 3, 4, and 5. Okay, in additional information number 3, it mentioned that the accounts payable and bank overdraft of Jaya Berhad were settled in full by Jaya. Okay, as mentioned in additional information number 1, Sri Jaya Berhad did not take over the liabilities of Jaya Berhad. Okay, liabilities of Jaya Berhad is not taken over. So what it mentioned here in additional information number 3, the amount of account payable in Jaya. Okay, in Jaya, the liabilities are account payable and also bank overdraft. Okay, account payable and bank overdraft. So it mentioned here that the accounts payable and bank overdraft of Jaya Berhad, since Sri Jaya did not take over, Jaya Berhad would have to settle it by themselves. Okay, so they have to settle it normally using cash. Okay, settled by Jaya Berhad using cash. So these are liabilities not taken over, settled by Jaya Berhad personally. And then with regard to additional information number 4 here, preliminary expense. This is the expenses for me forming the new company, which is Sri Jaya Berhad lah. Sri Jaya Berhad is the new company will be formed to take over Sri Berhad and Jaya Berhad. So will be the formation cost. This will be recorded in the books of the buyer, okay, not in the books of the seller lah. In the books of buyer, which is Sri Jaya Berhad. And then additional information number 5 here with regard to Sri Jaya Berhad. It mentioned that Sri Jaya Berhad also issued 500,000 6% debenture at par, which were fully subscribed. Now, in order to finance the acquisition of Sri Berhad and Jaya Berhad, Sri Jaya Berhad would need to have a lot of money, and to do that, to get a lot of money, Sri Jaya Berhad issue 500,000 debenture, 500,000 6% debenture at par, which is fully subscribed. Therefore, they will get in terms of cash lah. They will get it in cash, which is they will debit their bank account and credit debenture account. So this is again in the books of Sri Jaya, books of the buyer, not the books of the seller. Okay, at the end of the question asks, normally part A here, the question asks to calculate the purchase price and determine the purchase consideration. So the purchase price would be, how to calculate purchase price? Again, you have to find assets taken over minus liabilities taken over. This will get net assets taken over plus goodwill and minus any liquidation expenses paid by the buyer. So with regard to additional information here, it does not mention that the buyer, Sri Jaya, paid any of the liquidation expense. Therefore, there is no liquidation expense paid by the buyer. Okay, there is only assets taken over and goodwill. Goodwill is mentioned here, right? Goodwill of Sri Berhad and Jaya Berhad. Therefore, you can calculate the purchase price by calculating the net assets taken over, which is asset minus liabilities of each of the company, Sri Berhad and Jaya Berhad. Therefore, we have here for Sri Berhad, all the assets at revalued amount, okay, minus liabilities. Untuk Sri Berhad, Sri Jaya acquired all asset except bank. So bank will not be included here. Okay, asset bank of Sri is not taken over. Okay, not taken over. The assets taken over is freehold premises, motor vehicle, plant and machinery, furniture and fittings, inventory, and account receivable. And also Sri Jaya take over liabilities. So these are assets taken over, net assets taken over. So the net asset taken over is 1267 and plus goodwill. Okay, plus goodwill. So you get purchase price is equals to 1290. This is for Sri Berhad. Jaya Berhad. For Jaya Berhad, Sri Jaya acquire all asset only. Okay, asset only. Therefore, assets in Jaya Berhad, which is taken over, will be freehold premises, motor vehicle, plant and furniture and fittings, inventory, and account receivable. Okay, account payable not taken over, bank overdraft not taken over. This will be settled by Jaya personally. Okay, so this is assets taken over, which is 920. Liabilities taken over, nil, 0. Therefore, you have net assets taken over for Jaya is 920 plus goodwill. Goodwill here mentioned 20,000. Therefore, you get purchase price for Jaya. So these are the total untuk Jaya and Sri and Jaya. Okay. So the total Sri Jaya have to pay, the purchase price will be 2230. Okay, as you know, purchase price should equals to purchase consideration. For example, here the purchase price, okay, for Sri 1290 should equals to the purchase consideration 1290 here. Okay, therefore by balancing this amount, you will find cash amount, the cash amount that you need to find here, the balancing figure, cash. Okay, as you know, purchase consideration for Sri Berhad, Sri Jaya will pay to the ordinary shareholders 800,000 ordinary shares at a premium of 20 cents. That means $1.20. And to the debenture holders, Sri Jaya will pay 55,000. Okay, at par. So total here is 1015. 1015 minus 1290, then you get the balancing figure, which is 275000. This is the balancing figure untuk cash amount. Okay, the amount of cash that Sri Jaya have to pay Sri Berhad. For Jaya Berhad, Sri Jaya Berhad will pay to the ordinary shareholders 400,000 at a premium of $1.25. That will give you 500,000. And in Jaya have preference shareholders. To the preference shareholders, Sri Jaya will pay 250,000 at a premium of 20 cents. That comes to 300,000. Okay, so total amount of purchase consideration that Sri Jaya would have to pay Jaya Berhad is 800,000, and the purchase price is 940,000. This is the purchase price untuk Jaya Berhad. Okay, so compare purchase consideration 800,000 and purchase price 940. The balancing figure is 140. This is the amount of cash that is promised by Sri Jaya to pay Jaya Berhad in additional information number 1. Okay, additional information number 1.